Good morning, guys. Welcome to this Tuesday, February 24th. You got 2/24/26. It's the date of today. A lot of twos in the today's date. Even numbers and twos. I wonder if that means anything. The market is just kind of meandering around here in the range, in the middle of this range. A little bit of weakness right now, but it's been pretty much meandering around. The news for this morning is housing data coming out at 9. Yeah, I've got the FHFA and the Case Shiller numbers coming out 9 o'clock. We have a bunch of speakers: Bostic, Susan Collins, Waller, Lisa Cook, freaking speakers every ghouls. There's like 5 speakers this morning. So yeah, I don't know if any one of those guys say something which is going to be out of the ordinary, then that could potentially be an issue. Consumer confidence at 10. But so the real news, housing data at 9, consumer confidence at 10, at the 2-year auction at 1. So that's about it. Tomorrow we get more of the same. A little bit more action on Wednesday and on Thursday and Friday. With Wednesday, we get the NVIDIA earnings. And yeah, everyone looks at the NVIDIA earnings. That's going to be a big deal. Probably who knows? There's going to be some pre-trading for that, but I think the bigger reaction comes obviously on Thursday after the market get the number and digest it. So, but right now Tuesday, pretty much looks like more of the same. We are back here in this lower range, backed off the highs a bit. It's the same exact story. Just watching these lower edges, that 69 or 67, 70 to 6,800. This whole area on the bottom range of it. I may actually mark that stuff up when you have big ranges like that because it's easy to see it. But these are ranges which are or areas which potentially could change our capital flow. So you see, we have they stalled this on the way up at 6,800. We've been done probing below it at 68, 67, 70, 60 to 70. And right now we are trading a little bit above that. And if they start taking out lows here, start moving lower, we have a big ledge here at 68.20. That needs to come out all the way down here to the 67.80. So this range is what I'm keying in on for potential direction in capital flow. So if that changes, yeah, it could be a bit more ugly. I mean, it's interesting to see though, because some of these stocks, like Microsoft, that's a huge stock, massive stock, has been up in the mid 500s. They're down to 380. Can you believe that? With that amount they're taking down that stock. So there's a rotation going on out of tech into other stuff, and eventually that's going to probably rotate back in again. Because right now, Microsoft at 380 feels pretty darn cheap, you know. And if they're going to be in the forefront of then the AI development, yeah, then there's going to be some value to be had there. So this month, its rotation between stocks has been pretty interesting, and so it's not the free for all selling, sitting on a sideline, risk off kind of thing. It's more a rotation into different areas, and that's why I think the general market is not quite moving lower. But it between stocks, man, it's a bloodbath going on. So it is interesting. So I'm going to start off range bound. On a futures market, we trade the basket of stocks, so we don't have to worry about the individual markets or trends and stuff like that. Just looking at the basket of stocks, what is it doing? And rotation between stocks in the same basket doesn't really move it the up or down a whole lot. So at this point, I'm going to just start range bound, looking to buy weakness, sell strength, watching these lower areas. If they're going to be having an issue to the downside, then those will come out, and then we just have to adjust accordingly. So looking to buy against support 68.50s, 68.30s, 68.20s, 68.10s for rotations up. My 68.40 level, I believe, I think I moved out of the way. Trying to make things not so crowded. And so you're really looking at buying support all the way down here to the 68, 67.90s here would be down at this level. So 67.90s means that we're taking out that 5-letter ledge. That ledge is right here at this 68.20, this big 5-letter ledge. If that comes out, I would be more inclined to start leaning towards a short side. Still looking to buy against the next two levels, 68.10, 67.90s, rotations up. But if both of those comes out, yeah, bets are off and we're heading lower. Now we would have a pretty good move to the downside already on its way. So it's getting on that move early. It's also put you at risk for getting stuck if they hold 68.20s. So I would wait for 68.20 to come out before I really aggressively try to get short. I would look to buying opportunities at these levels. It could be opportunities on the short end on the way down here. I would not count on those as big opportunities. And basically, if they take out support here at 68.50s, looking for a run down here to the 30s, yeah, that's a good 10 points. So you can get on that. If you can see it and start to take this lower, and then you can look for a potential pullback to get in. Yeah, you can probably take it between levels, but that would be the way I would approach that. So getting on that short side on the way down early, it's risky, but if you just try to get on it when they take out support, that would be probably the best way to do that. Same story on the way up, looking to get short against the 68.70s, 68, or what is that? 85 to 90s, and 6900s, 6910s, 6920s, up to the 6930s. Above 6930s, we'll be smiling because then we are back up, heading up to that 6960 or above. So looking for short setup all the way up here. I would be more inclined to lean in on the long side if they start taking out that 6910s. So a couple of levels up, you see this 4-letter edge is at 6910. If that comes out, we have now them on a 6820. So they start taking out the value area and start trading above it. Yeah, we may have a potential move to the upside, but I would still look for shorts against these resistance areas on the way up there. Now, depending on the momentum you're seeing in either direction, it could feel like the market is rallying or falling apart. But as long as they stay in this range, they're pretty range bound. So it's just how they travel between the edges. Interesting stuff going on right now, but that rotation between stocks has been brutal. I think at Microsoft at 380, man, that is brutal. And like 150, 160 bucks lower than its high or something like that, maybe even more. So if you have money, pick up some of those stocks. That AI trade is not going anywhere. So this rotation is an opportunity at this point. Knock it down some of these stocks, and the poor people hopping on this. You don't have conviction about the long-term trend of what things are going to be going in the long term, you'll bail out of it, take your losses and bail and chase the next little short-term trend. But I'm thinking I'm fully invested in that AI trade. It is coming, and it's going to be something which is going to change things quite drastically. All right, so that's the ES, range bound ES. I would hate to break it to you, but we're going to be range bound on NASDAQ too. NASDAQ's though a little bit weaker. They took it a little bit lower, so that's heading back down here. If I fold this guy back together, you get it's okay. It says, yeah, I mean it's probably good to do this. You can see this whole distribution here. I can see this. You can see a couple of low volume areas, a couple of high volume areas. Unless you take out that 420, 430 on the way up, the 25, 400, we're pretty much in this range here building value. And you can see one low volume area up here at the 425, 400, a low volume area here at the 24, 600. It's a 1,000-point range almost we are dealing with here. And if you break out this move out of the middle to the downside, we have the bulk of the volume right now is trading here at the 24, 800s. So looking to buy weakness, sell strength, same story there. I would key in on that 3-letter edge, 25, 100. If that comes out, I would be more inclined to look for moves to the upside. If they take out this 3 or 4-letter edge at the 660s, I would be more inclined to lean towards a short side. And that happens to be right here at this the low end of this range here. There was low of yesterday's low was at 670. The day before that, the Monday's at 680s. So yeah, so we've been bouncing off this level right now. That comes out, I think we may see a challenge of this low volume area. And that, I mean, if that happens, that would be pretty brutal. It can be one of those big risk off days when you don't want to look at your 401k for a couple of days, you know. So looking to buy weakness against this 760s, 730s, 680s, down to the 620s. I would always give it one level outside the obvious on the Nasdaq. So one probe to the downside to 620, I would not be too concerned about, but I would look to still look to buy against these levels. If they hold below that 660s, I would be then more aggressive on the short side. They can even be, you don't have to wait for it to hit 620. You can get short earlier than that if you want to. You just have to find good trade location. But Nasdaq, when it moves, it's so freaking whippy and so volatile. Man, it can just whip against you freaking 200 ticks, and it's not much you can do about it. I mean, it's the times that try to repair a trade like that. You get in and you try to repair the trade, and it's whipping 200, 250 ticks against you, and yes, find yourself making your trade bigger just to get whacked, and then you're sitting there with like $200 down right from the get-go. It's like, yeah, great. And that's on the micros. So that's the micro contracts, not even the full size. Full size contract, that would be like a $2,000 in the whole kind of a trade. So Nasdaq, you just had to find a good trade location and not be too aggressive. Anytime you're too aggressive, you tend to get into you get caught if you wish. And on the way up on the Nasdaq, looking to sell strength 890s and 940, 950s, 990s. 25,050s, 80s, up to that 25 120s rotation down. And that 120s is that big that three-letter edge up here. So above that three-letter edge, I would lean in on the long side. Below this 3-4 letter edge, I would start thinking short side of the market or start trading from the short side, see if I don't want to push it. But remember, I mean, even if you're pushing the lows there, you're still down at support. And it's the same story up here. When you start taking out the upper areas, you're still up pushing out resistance. And sometimes you just get the market trying to push the edge a bit, you know, see if they can take it out. It looks like they're taking it out, but they aren't. And that's always the trade-off. It's always a trade-off. There's no rush to when you get to an outer level like that to step in front of it. I would give it a little bit more room because more and more than often you see them churn at that level for a bit of time before they actually fail. And the time I get too aggressive, you get great trade location on that first trade, but they manage to shake you out of it, and then you have to figure out a way to re-engage it. And you know that's just so you let the market just churn a bit, and then if it looks like it's not successful in taking it out, then you can take the trade and a little bit more certainty to it at that point. And if they're going to try to run the edge a little bit, you may have a shot at missing that part and getting on the right side of that as well. Anyway, so that's the Nasdaq for you. So both of them start range bound pretty much today, and let's see how the market reacts to news if they have anything else going on. Nvidia earnings, as I said, tomorrow is going to be the near-term biggest thing. We also have a State of the Union speech tonight, but that's not going to do anything to the markets per se. So, and as I said, the next big thing I think is going to be the Iranian situation, short-term potential drop in the market given if military action kicks in. Anyway, but I don't think that's going to happen during a trading day. So it's going to be most likely that after the market close. So it's going to be time to digest before market reopens. At least I hope that if they start action like that in the middle of the week, that the market would be pretty crazy. So finally, last little wrap in on the bonds. We have a 2-year auction coming out today. I think we have a 5 tomorrow. Let me check. We have a 5 tomorrow, 7 on Thursday. But right now we're still range bound. We keep trading in a pretty tight range. So yesterday was a pretty good range day, 1714 up to the 1805, so 3/4 of a point. But when it moves like that, pretty good to the upside, you seldom get a big rotation down. It happens sometimes, but more than often you kind of get stuck up here. So even if you get short at great trade location, at the upper level here. I mean, I was hesitating because they did pop, did a couple of more ticks, but they didn't drift more than like 3-4 ticks down here. So it wouldn't be a big trade if you try to get on it. You had to sit for a while, but it is a pretty high probability trade once it runs out of gas like that. But it sometimes it just doesn't go very far afterwards in terms of retracing. But anyway, so bond market just range bound. Looking to sell strength against the 118s and 1804s and 1810s. Looking to buy weakness 1725, 1720, 1712s for rotations up. And that's pretty much the range. So just kind of trading it like that, 2-3 levels from where they start today. And then let's see if they if we get good setups to lean against. All right. You get a good setup on the bonds and you get in on the right side of it, you'll be happy. It'll be a pretty good day. Right. So back to the ES, and so far pretty much where we left it. So we'll wrap it there for now, guys. So range bound trading, we know when to change our minds. Otherwise, I will just trade the market as a range bound market right now until I see some sort of a piece of news or something that's going to drive it. Ready? Good trading, guys. I'll see you back at 11:30 for the next update. Later.